Are you nearing retirement and considering implementing the infinite banking concept, but have the feeling that it's too late? Today, we're going to talk about how to combine the two worlds of investments and life insurance. Hi, I'm Olivia Kirk.
I'm Tim Urick. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
For the best advice on controlling your cash flow, be sure to subscribe to our channel, and don't forget to hit that bell to be notified when we upload new videos twice every single week. So you're on the threshold of retirement, and you're wondering what the best strategy is to make sure your assets last as long as you do. You see, there's a lot of noise out there, and it could be confusing as to how to spend down your assets and how to make your money as efficient as possible. By implementing the infinite banking concept, you can make your assets more efficient, serve as a volatility buffer, and also guarantee survivorship benefits and a legacy. Check out our latest YouTube video to learn exactly how we use this. We'll see you there. I was talking to a guy this week who's nearing retirement in only 6 months at age 58. He came to me with concerns about how to take his buckets of retirement assets and also implement the infinite banking concept with a policy. He wasn't sure how the two worlds fit. When it comes to retirement money, during the accumulation phase, when you're saving up and building up your pool of assets, it's easy in the matter of all you have to worry about is saving. However, as you get closer and closer to retirement, the focus shifts from saving to how do I make sure these assets last and last me my entire lifetime.
So you go from a mindset of, I'm willing to take some risk because I have some time to recapture any momentary losses, to a mindset of, I can't afford to have any losses because retirement is right in front of me.
As he's nearing retirement, and as anyone's nearing retirement, you have to consider that your income is going to stop. And in this family, his income was $145,000. Now, his wife is going to continue to work for an additional 4 or 5 years, but then her income's going to stop also. And we need to make sure these assets are going to last as long as they do.
So the real question is, how do you make his money as efficient as possible so that he can reach all of his income and retirement goals?
Leave us a comment down below. How are you using your infinite banking or whole life policy to protect your retirement assets? Well, implementing the infinite banking concept in this person's case could mean something very simple: giving him permission to spend down his assets. Spend down those assets without worrying about sacrificing his wife's livelihood should he pass before her, and also his livelihood should she pass before him. Additionally, we could lock in a legacy piece for their 2 daughters.
So let's think of this in 2 steps. Step number 1 is to set up a policy on him so that his wife has survivor income generated from the death benefit in his policy. Step number 2 is purchasing a policy on the wife, which will give her permission to spend down all of the assets to supplement her retirement income and her survivor income needs without jeopardizing the legacy for their children.
Now, we can't forget that these are specially designed whole life insurance policies designed for cash accumulation. So what does that mean in this case? Well, by transferring some assets from these retirement income accounts, using that money to fund life insurance premium, you're moving money from at risk and forever taxable to save money that's never taxable, that you have access to, full liquidity, use, and control over, so that as life goes on, you still have access to that money. And even after accessing that money, you're not interrupting the compound interest curve on that safe pool of money.
And in our discussions with this couple, we found a few things. Number 1, they want to travel. Well, they can borrow against their life insurance cash value to pay for their trips, and then pay back those loans using their retirement income. The other thing they want to do is every 4 or 5 years, they want to buy a new car. Again, they could buy the car by borrowing against the cash value of the life insurance and then make those payments back to the policy to replenish for the next vacation or the next vehicle. So there's a lot of things that they can do. And oh, by the way, this is making their money more efficient because they're not losing opportunity cost by paying cash. Neither are they losing opportunity cost by financing directly with a bank or a credit company.
Another thing to consider that these policies could be used for is a volatility buffer. Since all of their money is in investments, there's risk associated with investments by nature. If, for example, in a down year, a year where the market went down, the account value went down, they still need to generate income because their income from their jobs have been turned off. They could instead borrow money against their life insurance policy so they don't have to have a double negative in a year.
So there's a lot of reasons when you're on the threshold of retirement where life insurance can really come into play and make your retirement better.
If you'd like to get started with an infinite banking concept policy, a whole life policy designed for cash value accumulation, visit our website at tier1capital.com. We'd be happy to chat with you. You could schedule your free strategy session today. If you like this video, be sure to check out these two. We picked them out special for you.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.